Determine.
What we predetermine, what we expect. Expected yani budget. Actual what happens actually yani reality. For example, I am saying sales units. We assumed that we predicted as that our sales is supposed to be 10,000 units. Okay, mashallah. It was my plan. Subhanallah. Actually, I made it. Bihamdihi ta'ala. I made it. I sold 10,000 units aslan. So very nice. But in the numbers, in the dollars, let's see the variation. For example, I assumed my budget, sales budget was that I will make, let's say, $100,000. It was my predetermined budget. But subhanallah, when the actual results come, it is showing that we made a revenue of 120,000. Okay, variation is there. Good or bad, we will discuss. Then we discussed that our direct material or my material budget was, let's say, 40,000. But I spent around 45,000 on material. Good or bad, leave it. But variation is there. My labor budget was, let's say, 30,000. But I paid the labor around 40,000. Oh, then variable overheads. Let's say my variable overhead budget was 20,000, but I managed it in $18,000. Fixed overhead, let's say I was assuming then the fixed cost like rent or fixed type of cost supposed to be 10,000, and let's say it is now I made it possible in 9,500. Might be I asked a discount from the landlord and he agreed. Khalas, okay. So can you help me with the calculator, please? Giving me the number, giving me amount for the profit, please. What is the profit? Revenue
Oh,
minus cost.
for the budget, there is no profit.
Oh, very bad, very bad. It's my bad. Let me correct it. Okay, there should be some profit.
5,000.
5,000. At least some profit. Why should we are doing this thing if no profit? Actually,
7,500.
mashallah, marhaba. Now this is budget, that is actual. Two columns are there. Now we have one column, which is the first time we are making in our class variance. Variance. Variance is the variation. Variance is the variation. Variation means the difference. The difference is, the variation is the difference. The difference is, let's see. Units, I will not consider the variation.
Like we have a 2,500 variance in the profit.
We will do line by line, yahi. Line by line, habibi. Look, in the sales, the variation is 20,000. Okay, mashallah. Is it good or bad?
Yeah, good.
I assumed I will make 100, but I made it 120. Haza, mashallah, very good. Zen, yani, is favorable, is good, right or wrong?
Yeah,
Then,
right.
what about the material? If I looked at material, oh, I was thinking that I must spend 40,000, but I do spend 45. So happy or sad? Red color,
Bad.
I used dark color, something like that, is bad. We will not write unfavorable. We will write adverse.
Inverse.
Adverse will always with the negative sign, okay?
Yeah.
Then I was thinking the labor I should pay 30, but I ended up with 40. So wallahi is a bad thing. I paid more. Adverse. Fixed overhead, again, I paid more than the prediction, 4,500 bad adverse. What about the variable overheads?
It was favorable of 2000.
Paid less. I paid less than expected. Expense is below the budget. So it's a favorable thing. Ultimately, the result is, if you compare this two, or you do all the maths here, the answer must be same, right or wrong. The profit is increased. Expected profit was 5. Actual profit is 7,500. Subhanallah, bihamdihi ta'ala. I made a plus of 2,500. That is a favorable thing. That is the inception of variance. How the variance analysis arises when you compare your budget with actual. And in this illustration, yeah, Mustafa, the budgeted units and actual units are same. So we just compare budget versus actual. Got my point or no? Any problems?
No, sir, no problem.
Now, another illustration for today. Question number 2. Here, the budget is something different in units. Actual is something different in form of units. We know that we need to compute variance here. The requirement of this question is variance. The problem is variance means like versus like. Like versus like means, apple to apple comparison. Apple to apple comparison. Apple to apple. You cannot compare apple with mango, something like that. You have to compare like versus like. What does this mean, sir? Like versus like. It means that the actual is about 15,000 units. So the budget must be 15,000 units. Huh? Sir, actual in the previous question, the actual and budgeted units were same. So like versus like, we compare them. Khalas. But here there is a big problem. The units of budget and actual are not the same. So variance analysis not possible. Khalas. We cannot do variance until and unless we revise our budget. Yani if something like that, yani your variance, your actual and your budgeted units are not similar, you cannot do variance analysis until you revise your budget. You need to do revision in budget, but technically in your syllabus, it is not called revised budget. In A2 syllabus, or if you do ACCA, if you do CA, Chartered Accountancy, or Pakistan, or either India, it's called flex budget. What is called? Flex
Tax budget.
budget. Or some books suggest it's a standard budget. Standard budget, flex budget, or in Pakistani language, revision, revised budget. كله سوا سوا يعني. All are same. Got my point?
Yeah.
Always remember, the flex budgeting must be based on the actual units. Always remember, the flex budget, the standard making, or the revised budget is always on the basis of actual units. Got my point?
Yeah.
We have a formula for flex budget. I can write a formula, but I don't want you to use the formula. I want you to use the simple logic. Simple logic is, I will ask you. If you can answer me, you have the formula in your mind. Otherwise, I will write formula. Yeah, Mustafa, look. The revenue budgeted was how much?
10,000. 100,000.
100,000 for how many units?
10,000.
If the budget is not at 10,000, if it is on the basis of 15, what it's supposed to be?
150,000.
Yani again, sir, my budgeted sales was 100,000. That is for the 10,000 budgeted units. But if the budgeted units are 15,000, what the sales supposed to be?
50,000.
That is called the flex budget formula. Yani budgeted dollar, budgeted units into actual units. Okay.
Sense.
That is called the flex budget formula. If you want to memorize formula, okay. Otherwise, keep the trick in your mind. This is the amount for this many units. If the units are going to be deviated to the 15,000 one, what is supposed to be? Khalas. That is the formula of flex budget. Your answer came up here, 150. Am I right?
Yeah.
What about the next one? Can I use another color so it looks nice? Okay. 40,000 is the material budget for 10,000 units, which means we budgeted $4 per unit. Correct or wrong?
Correct.
The actual units are 15. So what it's supposed to be, the flex budget?
60,000.
60,000. MashaAllah. We are doing the flexing. This is material, sorry, not the labor. Now the labor. We budgeted, we will pay 30,000 for 10,000 units. But actually we have 15,000 units. So what is supposed to be?
45,000.
MashaAllah. What about the variable cost? 20,000 was expected expense for 10,000 units, means 2 per unit. But we have 15,000 units supposed to be.
30,000.
SubhanAllah. Then
7,500.
what is the name of this one?
Factory overhead.
I would like to ask, can you tell me what is the definition of fixed cost?
It does not vary with the number of units.
Subhanallah, you said it. Remain. You said it. Remain unchanged. That is the definition of fixed cost. So there is no flexing aslan in fixed cost. We are not going to do any flex budgeting in fixed cost. There is no revised budget for fixed cost. Fixed cost will remain as it is as the budget. Mafi change, no change at all. Why? Because Mr. Mustafa told me the definition and it's correct. Unchanged, not change, remain constant, right or wrong?
Yeah.
Total profit is 1,05,1,05 minus the plus 30, 135, 140. So it's 10, I guess. Check for me.
Yeah.
Till here, note down. Then I have to make the column for variances. I need to remove this working. This one. Okay. Now, like versus like, we will do the variance between standard and actual, yani flex budget and actual. So the first one, 150 was flex budget. Now budget is khalli wali. We will not consider the budget. Okay. Now, oh, what happened? Sorry. Now, the first thing is good thing, favorable, right? The second one, as per the budget, supposed to be 60,000, but the expense on material is 50. Again, a good thing, favorable, right or wrong?
Yeah, right.
Sir, what was the budget? What is the actual? Same, yani no variance. Variable overhead, as per budget, supposed to be 30. Flex budget, yani, but it is 22. So it's a good thing of 8,000. MashaAllah. Fixed cost, budget and flex will remain always same. Actual is 7,000. So it is good or bad?
Good.
And
Last one, yeah, that's bad.
last one is good or bad?
At 2000 adverse.
Ultimate answer
6,000.
26,000, but not red. Why I wrote red color? Supposed to be good, 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 good. Favorable, right or wrong? That's how
Yes, right.
it's going to be done in your paper for A2.